products. But on the other end of that spectrum is, the wealth that's going to be created by the IPO of SpaceX, OpenAI, et cetera. I mean, that's several $1 trillion worth. And as we know, there's like a marginal propensity to consume from the wealth effect. So I think the consumer is getting a tailwind later this year, but a lot of it is for those who own equity.
I mean, a tailwind from owning the IPOs?
Well, it's actually in private investors. As we know, SpaceX was probably seated at, $50 million. It probably raised, tens of billions over the last decade. But now it's going to have a net worth valuation of around 1.7 trillion. So that's actually now going to be monetized for the LPs of the funds that invested in SpaceX. So there, several $1 trillion is quite a lot of stimulus to the economy.
Wow. Okay. Hampton's real estate market. Watch out. AI trade. How do you feel about it after Nvidia?
I mean, a company with the size of revenues, Nvidia, growing at 8%, I think shows that there is still, unrelenting demand for the product Nvidia sells. And then we know that those who are starting to use AI are actually noticing a gain of function on productivity. Ken Griffin really stated it well when he says he could see it's replacing a lot of analysts. So to me, I think not only are the users of AI benefiting, but there's still a shortage of those who are supplying the equipment.
But aren't you still calling for a pullback in stocks and something meaningful? Like the one we had already didn't really qualify, if you will, under what you were thinking could happen, right?
That's chair and talked about photonics for 2 or 3 years and talked about optical networking. Those have become very popular stocks among the trading class, among retail traders. I think those are places where people took some money off the table to participate in the SpaceX IPO. And maybe now that they're getting out of that, they're putting money back into some of those names. That has nothing to do with the fundamentals of the companies. It has everything to do with the aspects of the market right now. Those are very different things. And I think, frankly, when we sit here in this room where I have spent years, we think about the trading of things. They're just names. I've known traders for years that don't know what the companies do while they trade them. If you're an investor, you want to be thinking about what the companies do and what the prospects for those companies are. And it's important to understand what you're talking about when you're talking about the moving share price and the wiggly line on the screen.
And Corey, when we look at Anthropic again and its blueprint, if it follows this SpaceX blueprint and it goes for this less than 5% float, does that fundamentally change then how we are going to see future AI companies approach coming public? Because, I mean, OpenAI would be our next conversation then likely in terms of these mega names. Are we rewriting the script right now as we're talking?
I think it's going to be a new playbook, and we want to throw Databricks in there too. These are companies that have been private for a very long time, comparative to what we used to see in Silicon Valley. They've raised a lot of capital. A B round and a C round was sometimes all a company would do before an IPO. We're looking at companies that are doing D, E, and F rounds, and companies that were succeeding, not companies that were desperate. It used to be companies that were desperate that weren't good enough to do an IPO might still be able to raise money from venture capitalists, and the venture capitalists would force them onto the markets just to get some kind of a payback, and they would put lipstick on those pigs in the process. What we see happening here with, you like that lipstick on a pig?
I do. I like that.
They made that up here a long time ago. There are pigs running around here. Look, what we see here are really big companies with lots and lots of revenues. Some of them have some hair on them, but these are big companies with lots of revenues and big market caps in the private markets, and they will have big market caps in the public markets. And we're talking in SpaceX, Anthropic, OpenAI, and Databricks. These are all possibly trillion-dollar companies when they hit the public markets and might hold in those kinds of valuations, which we've never seen before.
Yeah, and just in the last hour, Bloomberg came out with a report. Even more executives are leaving Google Alphabet to go to Anthropic and OpenAI as well. I mean, it just tells you a lot. I'm wondering about SK Hynix as well, which now we have the F1, which is obviously the foreign version of the S1, for its ADR listing July the 10th. $29 billion. Do you remember how much Alibaba was?
Yes,
$25 billion.
yes,
I mean, it's like these massive numbers have become so normal to talk about.
You know, it's a different characteristic. Again, talking about the characteristics of finance, not the companies. But we changed some rules around IPOs, and there used to be a thing that had a limited share count, where if a company had more than, I think, 1,000 shareholders, they had to actually go public. Maybe 100 shareholders. I have to check my facts on that. But it forced companies, once they had a lot of investors, that rule went away, and so companies were able to stay private longer. Now, I don't think there was a terrible rule change. I think the company should be well seasoned when the average investor gets involved, particularly when indexes force everyone to own these shares, whether they want to or not. But the result has been a longer and longer time till companies come public, and the markets, frankly, can handle these big IPOs right now.
Corey, we're going to have to keep doing these chats every few weeks here so we can keep up with the IPO markets with you.
I'm
always
all about the IPO.
Oh, don't we know it? You always have great info. Thank you for joining us today, and thanks for joining Sam.
Why the market is still be underestimating the next phase of Nvidia, memory and the AI? One of the biggest questions investors continue asking is simple. Has the AI boom already peaked, or we are still in the early inning? After listening to multiple analysts, semiconductor executives and Micron latest earning calls, and one conclusion become increasingly clear. Most industry leaders believe we are nowhere near the end. The AI infrastructure build-out is far from the finished. Several analysts now estimate that AI infrastructure spending could be reach trillions of dollars before the end of this decade. Why? Because AI adoption is still incredibly early. Today, the largest buyer are the hyperscalers like cloud providers and AI labs. But that's only the first phase. The next wave includes enterprises AI, government AI infrastructure, and citizen AI projects, healthcare, manufacturing, financial services, robotics, automation system. Every new industry adopting AI requires additional computing infrastructure, and every new AI servers require memory. Memory has become the bottleneck. For decades, processing power received most of the attention. Today, memory has become equally important. Modern AI models need enormous amount of memory simply to operate efficiently. Without sufficient memory, GPUs spend valuable time waiting for data instead of processing it. That reduces overall system performance. This is why high bandwidth memory has become one of the most valuable components inside every advanced AI servers. Supply cannot catch the demand overnight. One misconception is that manufacturers can simply produce more memory. Unfortunately, semiconductor manufacturing doesn't work that way. Building a new memory fab takes years. Construction, equipment installation, qualification, yield improvement, customer certification, every step requires enormous time and the capital. Even after spending tons of billions of dollars, production ramp gradually. This is why many industry executives continue expecting supply constant well beyond the 2027. AI demand continue expand. One reason analysts remain bullish is simple. Demand isn't coming from only one customer anymore. Every quarter, more industries adopt the AI, more enterprises deploy internal AI, and more government launch sovereign AI initiative. More developers build AI native software. Instead of demand becoming concentrated, it's become diversified. That generally creates a stronger long-term market. Nvidia still set at the center. Despite the increasing competition, Nvidia remains the foundation for the most advanced AI infrastructure. The company doesn't simply sell the GPUs. It's delivered an entire computing platform. CUDA, networking, NVLink, inference software, AI libraries, developer tools, and system integration. All of these pieces work together. That ecosystem creates switching costs that are the difficult for competitors to replicate quickly. Custom AI chips are growing, but so is the market. Investors frequently worry about custom chips built by Amazon, Google, Microsoft, and the Meta. Those products absolutely matter, but they are solving specific internal workload. Meanwhile, the overall AI market continues expanding at extraordinary pace. If total demand is double or triple, multiple semiconductor companies can grow stimulatingly. Market share isn't always the most important metric. Sometimes the overall market simply become much larger.